The euro rises as Germany's top court announced it won't delay a ruling on the country's role in the permanent bailout fund. Investors prepare for the expected launch of Apple's iPhone 5 Wednesday evening. And don't forget, we'll hear from Ben Bernanke and the Fed after their policy meeting on Thursday. I'm Brittany Umar, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with theStreet, and together we bring you the Morning Call Express. So futures are up this morning after a bit of corrective action yesterday. Scott, would you say the action yesterday was healthy?
I think yesterday's action was warranted and it was welcome considering the size of the move that we had last week. We came in yesterday saying don't expect the same type of powerful move that we had last week, but let's look for an inside week, some digestive type action. And yesterday, markets sold off, but I don't think it was anything so potent. You know, we did have a few little red flags in technology, but I don't think it's really anything to worry about yet.
So what would get you concerned?
What would get me concerned is if we start really breaking below the 21-day moving average in some of the key stocks. Right now, you know, we came in yesterday, we were, you know, I think the bulls are a tiny bit spoiled. You know, the indices are well above the 8 and 21-day moving average. Key stocks are not even close to them, so a little corrective type action is definitely healthy, and a lot of the high beta names that we saw actually start to see them yesterday, and they were a little bit more potent than you would like, but they were also that far extended with the size of the run that they've seen, you know, since those June 4th lows.
So what are the levels you're watching the S&P right now?
So let's take a look at the chart. We take a look at the chart of the SPX. You look right here and you'll see, you know, all the bears are growling. Look at this. Bulls are going to be trapped. Bulls are finished. And all we had was this day yesterday. Okay, this is the cup and handle type format that we've been talking about with the, you know, the uptrend since June 4th. This was that nice tight pattern. We broke above it on Thursday, little follow through Friday. So today, little downside action was fine. You know, I did say that, or we are looking for a potential retest of this, just a 1422 to 1426 area that we outlined in the recap, and we're not even there yet. So at this particular point, I'll pull back to retest this area, and if we hold it, I would think that's very, very bullish. We actually could even see a move down to retest the 8/21 day a little bit further down in the 1410 area and still be very strong. So at this particular point, I think you want to stay with your stocks that you like, but just don't chase price like we said yesterday. Don't be chasing the banks on day 4 of the up move or gold on day 8 or even the casinos that have had a nice run.
And before, you touched on high beta names, which have had major runs, but many of them have come in very extended. So where can we buy some of these names back?
Well, the question is, are they going to hold their 8-day or their 21-day? So you want to write down both points. So to do a quick little rundown, you look at Google, for instance. Google, take a look at the chart. I'll run through a few of them. Look at the size of the run since the July lows. So the question is, can you buy it around the 8-day, which is at 693, you know, by this, you know, breakout area, or down at 677? So watch the action of this stock in both areas. Same thing goes for Amazon. Amazon, unbelievable move since earnings, since 2:30. You know, following this line all the way up, extended. Look where the 8-day is. So write down 252, but also write down 246, because both of these would still be deemed healthy. Same thing with LinkedIn. LinkedIn, unbelievable move. Talked about buying it, you know, versus this level, right around here, right back to highs. So here is your 8-day at 113.67. So I think the 8-day and 21-day are very important for these key stocks.
And all eyes, of course, will be on Apple. iPhone 5 potentially coming out tomorrow. A lot of people will be turning to Apple for clues.
Yes, and why not? And yesterday, I know that the action was a little bit powerful to the downside, but again, it's up like 80 points since those, you know, earnings that came out, and you have a big event. I figured they might shake the tree up before the event. Yesterday's action was a little bit more potent. It did get some active traders short as it tried to break above 682.48 and failed. So at this point, I think a lot of guys are coming in with opportunity, you know, in their eyes, and rightly so. You look at the chart. I know for me, I lightened up a little bit also as it broke this small ascending channel here where it couldn't get momentum. So I'm looking to see if I could be a nice size buyer back into the 21-day moving average. So, you know, as far as high beta land, this needs to hold. You have one little pivot right here of 662.10. You know, if we were to break that and hold the 21-day and come back above, I will be a buyer there for a swing. And for active, I'm still long a little less than I had coming into yesterday, but I still think it's fine. And, you know, we'll monitor the action and not have our just Apple, you know, bullish goggles on like I tried to have yesterday. So we'll respect the trade.
All right, we're going to dive into all of this and more in the long version, so stay with us.
Hi, I'm Sean Hendelman of T3 Live. where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.